Bitcoin just dipped back below 110K, treasury companies continue to unwind, and suddenly the cries are back that it's all over, the top is in, and the bull run is finished. But is that really what's happening? Or are we simply watching a healthy reset before Bitcoin enters its most seasonally bullish quarter of the year? Today we'll break down the leverage flush, what it might have to do with treasury company overvaluation, the hidden fragility of the economy, and why both Alden and Cory Klippsten believe this is far from the end. Welcome to No Second Best, the show where conviction meets reality and reality points straight to Bitcoin. I'm your host Hurley. Let's get into it. The Bitcoin and broader crypto market is slipping into that familiar fear territory this week as Bitcoin volatility spikes hard but in the wrong direction. The price slipping back below 110K. Bitcoin Treasury Giant strategy also dropped significantly, breaking below $300 per share, a low it hasn't seen since early April. Once again, the it's all over crowd are out in full force. This price action looks to be mostly driven by derivatives traders getting wiped out, as just within a 30-minute window this afternoon, the crypto market saw $230 million in long liquidations. It seems that as Bitcoin climbed towards 118K over the weekend, the leveraged longs piled on, meaning people were expecting the price to keep going above all-time highs. This week it looks like the shorts have continued to call their bluff, which has caused the huge liquidations and the steep correction. While this is painful at the moment, history shows us these resets are healthy. They clear the froth and set the stage for the next leg up. And there's actually more at play here. Bitcoin treasury companies had stretched valuations that needed to cool off, something Alden points out and expands on later in the show. And here's one more data point to keep in mind. The 12-hour RSI on Bitcoin just hit levels we haven't seen since April. Now, RSI, or Relative Strength Index, is a momentum indicator traders use to see if an asset is overbought or oversold. And back when the RSI was at these levels, that marked the local bottom before Bitcoin ripped higher, meaning we're likely in very oversold territory here. Now, no signal is perfect, but when you line up technical exhaustion with a leverage flush, it starts to look less like the end and more like the reset we needed. But let's zoom out for a second, because there is something that feels off with this economy, something we talked about in more detail in the last episode. On paper, this looks like one of the strongest economies we've ever had. Gold continues ripping to new all-time highs above $3,800 per ounce, the S&P is still hovering near all-time highs, and even Bitcoin has spent months pressing against its highs. And yet, it doesn't feel that way. Underneath the surface, the picture is far less certain. Are we heading into a recession? Are we still inflating a bubble? Or are policymakers simply trying to keep asset prices elevated no matter the cost? That tension between record highs on one hand and real fragility on the other is exactly what Swan CEO Cory Klippsten spoke about in his recent interview with Kitco News.
Look, I think that people are nervous. I think that people can't figure out where the balance of power is going to be between opening up the money spigot, cutting interest rates, and trying to basically pump asset prices through the midterms, which I think is obviously a big incentive of the party in power right now, is to try to somehow not have a pullback every 4 years. Since we had pullbacks in 14, 18, and 22, they're trying to keep the liquidity spigot open and asset prices pumping. And then yet we're at all-time highs in so many different asset classes. A lot of your audience is, I'm sure, thrilled to see gold above 3,800. Bitcoin is near all-time highs. Stocks keep hitting all-time highs. But it all seems rather fragile, and a lot of what you see as far as credit card delinquencies and auto loan mispayments and student loan mispayments, a lot of people just don't have any money. And so it's how long can you keep on propping up this thing that really is also largely based on just dollar devaluation. It's down, I think the Dixie is down over 10% this year. And so it's, in some ways, it's just window dressing, and people are really worried that the core might be hollow or rotten. And so you don't know which way that's going to go over the next 3 to 6 months.
That's the paradox. Hard assets near all-time highs, yet beneath the surface, credit card delinquencies are climbing, auto and student loans are missing payments, and households are being stretched thin. Cory calls it window dressing. It looks good on the surface, but the core is fragile. And this structural fragility is precisely why we can't let short-term price swings shake us from the long-term Bitcoin thesis. The real story runs much deeper than this latest price dip. Now, many people are bracing for a recession. Some have been waiting for that next big print, the massive liquidity wave that follows every crisis. But Alden reminds us that cycles keep repeating, debt keeps mounting, and the cavalry isn't coming to rescue us. And that's why owning hard assets is essential. Here's Lynn from her conversation with Natalie Brunell.
Well, it seems like because we've known in history that this cycle just keeps repeating and the rich keep getting richer, which is why everyone's frustrated. And you've made this comment on my show before. We go from left to right, blue to red, and look, our debt just keeps mounting, and the average, like the standard of living for the average person sort of deteriorates because their purchasing power is being destroyed. So is your message to, empower the individual to acquire hard, scarce assets, essentially? And Bitcoin seems to be the most accessible one to me.
Yeah, I think we can only kind of focus on what we can control. Mm-hmm. I would not anticipate the cavalry's coming anytime soon. So I wouldn't expect, the fiscal side to get its act together in any sort of investable time horizon, which basically means that it's on kind of people to have to do it themselves. And depending on their level of knowledge, their volatility tolerance, and all sorts of things, there's different assets that can do it. I think that Bitcoin's the fastest horse in the race. Mm-hmm. Paul Tudor Jones and others have kind of been saying that for years, and I agree. Some people like gold, some people like equities, some people like Bitcoin, some people like real estate, some people like all the above, or some subset of the above. I'm kind of I like equities and gold and Bitcoin. Mm-hmm. But I do think that Bitcoin is, if you look back 5 years from now, it'll probably have had the best performance of that group, I'd expect. Probably 10 years as well.
Lynn's message is simple but powerful. Stop waiting for Washington to fix this. They can't and they won't. Focus on protecting yourself and your family. And among all the hard assets, equities, real estate, gold, Bitcoin remains the fastest horse in the race. And if you're still not convinced of this, I urge you to dig deeper and earn that conviction. In the wise words of Ben Workman, you can't borrow conviction. You have to earn it through due diligence. And in the case of Bitcoin, it's humbling yourself and putting in the hours to learn. Now, let's connect this back to the here and now. Because yes, Bitcoin just pulled back, but context matters. Take a look at this chart of Bitcoin's historical seasonality. September is almost always Bitcoin's weakest month. October through December is consistently the strongest stretch of the year. And if we look at the calendar, October is only a week away. And look at this chart comparing gold and Bitcoin with a 100-day lag. Bitcoin often lags gold by around 100 days, and then outperforms it. So after gold's massive breakout this year, history suggests Bitcoin's turn might be next. Which brings us back to Lynn Alden. She sees gold as frothy at the moment, and Bitcoin is ready to take the baton.
We've seen the outperformance in gold, and people like Ray Dalio, all the biggest investors, they're coming out, they're saying 10, 15% of your portfolio in gold now. Why do you think Bitcoin has underperformed? It's a digital gold. It solves for some of the defects in the physical version. So why do people, even though I know we're up 100% since last year, by the way, but people are feeling bearish about the whole situation?
I think it's because it's reality versus expectations. Part of why I've not been that disappointed is because I've been more sometimes describe myself as like a bearish bull.
Yeah.
On Bitcoin, I try to always have conservative bullish targets, which is like, I'm always like, I think it's going to outperform things, but I don't think it's going to the moon anytime soon. And we can talk about why that is, but part of the reason I like to hold both is because they don't always perform well at the same time. Sometimes Bitcoin gets ahead of itself. Sometimes gold gets ahead of itself.
Right now it's gold.
Yeah, gold's the larger asset by a factor of about 10. A lot of the biggest pools of capital still understand it better than Bitcoin. Bitcoin's viewed more as like a tech play, something that is to do homework on to figure out, whereas gold has been around for a while. And sometimes I get a little concerned around Bitcoin getting ahead of its skis. Other times I get a little concerned around gold getting ahead of its skis. Right now, gold, just by more metrics, is sentiment overbought, even though I still think the long-term case for it is good. But over the next 6-12 months, I'd put my vote for Bitcoin. I think that kind of that rotation, and I could be wrong in this, maybe we look back 12 months from now and maybe gold still outperformed again. But my guess would be Bitcoin is probably going to take over for a while. I think partially we had to see some of the MNAVs, overvalued MNAVs of treasury companies deflate to some extent. Once we saw like altcoin treasury companies coming to market, basically at that point, you just kind of have to expect there's going to be a washout to get the kind of tourists out of the system, both in Bitcoin and around Bitcoin. But then that allows for a platform to rebuild from. And now that we see the Fed getting a little bit more dovish, we've seen some of that kind of already get washed out. I think Bitcoin's in a better place for the next 6-12 months going forward would be my base case.
That's the rotation in action. Gold has ripped higher, but sentiment is stretched. Meanwhile, Bitcoin has absorbed a needed reset, from leveraged longs to overvalued treasury companies that seem to have peaked with the wave of altcoin treasury companies we've seen pop up this summer. With this excess froth and leverage flushed out, we're now in a better place for the next 6 to 12 months. Which brings us back to the bigger picture. Gold's strength isn't competing with Bitcoin. It's confirming the world's demand for sound money. Cory put it succinctly.
Gold isn't going anywhere anytime soon. And I think we've seen that with the price rise from the mid to upper thousands up to 3,800. It's holding up really well. I think it's a moving benchmark for Bitcoin because I do think that Bitcoin will eventually surpass gold in market cap. But look, man, we were targeting 15 trillion a couple of years ago, and now it's like 30. And I still think that the lines probably cross sometime in the second half of the 2030s, something like that is kind of my, or maybe after that. But I do think it's inevitable, but that doesn't mean that it shouldn't be in people's portfolios. I think in particular, when you look at folks that are older, it is less volatile than Bitcoin. It is more trusted. There's not as much that you need to know technically about it. There, I think, are lots of trusted custodians of gold, and you can obviously hold the physical depending on your security setup in your home and things like that. So I do think it has a place. We have so many clients at Swan that still have gold or that came from gold and then ended up becoming all Bitcoin. And we have honest conversations with them and just try to extol the benefits of sound money. And whether you want to call it digital gold or analog Bitcoin, they are sound money cousins. And I think that philosophically, we all recognize the same set of issues and the same problems. And I think thank goodness, there are two solutions to sound money. Yeah. I do think that in the long run, gold fans should be extremely happy that Bitcoin solves some of the problems that caused gold centralization and made it possible for there to be the 6102 Act back in 1933. I don't think that you can rebuild the global monetary system backed by gold. I think we've tried it so many times and I don't think it's possible. I do think it's not only possible with Bitcoin, but extremely likely that's what happens. And it's because you can move Bitcoin really well across space because it's digital, which is hard with gold. And you can do it across time because it holds its value like gold does across time. That's probably the way to look at it. Fiat money is really crappy at moving across time. It doesn't hold its value, but it's really good because it's digitized and it's good at moving across space. Gold is good at transmitting value across time. It holds its value, and we can both go get what do they always say, a nice suit on Savile Row for an ounce of gold, just like you did 400 years ago. But it's really bad at moving value across space because it's physical and it's heavy, et cetera. And Bitcoin is just fantastic at transmitting value across both time and space. And I just think it's a superior technology to fiat and to gold. It is a nice moment, and I don't expect it to get any different. I fully expect that we see gold at 10K an ounce in the next decade, and I expect to see Bitcoin at $1 million in the next 5-6 years.
What I love about Cory's framing is that it takes the gold versus Bitcoin debate off the table. This isn't about picking a winner today. It's about recognizing that both assets are rebelling against the same broken system. Gold does have 4,000 years of credibility as money. Bitcoin has only 15. But in that short time, it has already solved problems that gold never could. Instant settlement across the world, perfect divisibility, and resistance to confiscation at scale. And here's the bigger point. You don't need to believe that gold dies for Bitcoin to succeed. In fact, gold's breakout is a signal that people everywhere are searching for escape hatches from fiat debasement. Gold rising lifts the floor, and Bitcoin, with its superior properties, has the potential to take the ceiling off. So when Cory talks about gold at 10,000 and Bitcoin at 1 million, he's not just giving price targets. He's describing two parallel signals pointing in the same direction, out of fiat and into sound money. And if you want help navigating this next phase with expert guidance, Swan Private is here to help. The Swan Private team works with high net worth individuals, family offices, and businesses to build long-term Bitcoin strategies. Everything from estate planning to retirement accounts to corporate treasuries. If you're ready to take your Bitcoin strategy seriously, head over to swan.com/nosecondbest and reach out to a member of the team today. And don't forget, BTC in DC is less than a week away. September 30th and October 1st at the Kennedy Center in Washington, BTC in DC is where leaders from across finance, politics, and the Bitcoin industry come together at a pivotal moment for sound money in America. Get your tickets at btcnDC.com and use promo code SWAN for 10% off. And finally, a quick shout out to Mara, the world's largest publicly traded Bitcoin miner, for supporting this show and for helping make Bitcoin the world's most decentralized and secure monetary network. So when you zoom out, this doesn't look like a cycle top. It looks like a healthy shakeout. Leverage has been flushed, sentiment is fearful, and we're heading into Bitcoin's strongest seasonal window with the RSI back to April bottom levels. Gold's surge shows the world it's reaching for sound money, and Bitcoin, faster and scarcer, is next in line. But what do you think? Is this just a leverage shakeout before October, or do you believe we've seen the cycle top? Drop your thoughts in the comments below. Don't forget to like this video, share it with friends, and subscribe to the channel so you don't miss future episodes. Thanks for watching, and remember, there is no second best money.